when do you think the big ticket consumption could start to show a meaningful recovery? Because really that is where the growth is coming from.
Yeah, so big ticket size, I think definitely if we look at the durables, these sectors, it's not the peak seasons yet. So it's important to track the performance into second quarter peak season. And looking at the different dimension for the high-end premium consumption, relatively it's still more resilient. And I think part of the confidence could come from if we look at the recent like property transactions, it's also showing improvement. So this is also give us some confidence about this household balance sheet and also the consumers' willingness to spend. And at this moment, I think something still lagging behind, or I think investor may still have more concern is mass market and also the general or the younger generation spending power. And how to drive this segment, I think employment market is very important, since ultimately when we look at the key drivers for China consumption, is still the employment market and also the wage inflation. And with service activity, offline activities gradually improve, we believe this employment market will gradually show improvement.
And with the exports that we got this week, certainly better than expected, but that really raised some concerns about how much China is going to have to rely on domestic demand. Do you think that's going to be enough this year to mitigate some of the softness, particularly as we're hearing some pretty hawkish language coming out of the Fed, which will continue to weigh on those exports? Will it be enough this year to rely on consumption, or will that be next year perhaps?
Yeah, so definitely given the very difficult, hard to predict external environment, the domestic consumption is a very important driver to support the government's GDP target, and also our economics team's target of 5.5% GDP growth. But having said that, how to achieve that, we think because in the past 1 year, the service industry has such a huge disruption. So as long as this service industry go back to a more normalized level, it's actually quite enough to support the GDP improvement. Yeah, so I think first 2 months is probably not a good base to evaluate the improvement yet, since in the first 2 months last year we still have a pretty high base. And looking into March, the base is easier. We should see a pretty significant jump. And I think first 2 months more encouraging data already give us confidence that going forward the improvement should be seen.